Well, I think it's fair to say that share markets are in a trend-free zone at the moment. Investors have absolutely no idea what to do as they wait for European Union leaders to come up with their solution to the fact that some of their members and many of their banks are quite insolvent. Will Germany agree to cough up the money needed? Will Greece default, or rather, when will it default? These questions and more will be answered shortly. And in the meantime, markets were left to inspect the US Federal Reserve Board's so-called Beige Book, a roundup of economic conditions around the country which came out last night. Totally inconclusive, so Wall Street reversed yesterday's gains just in case. European stocks went up, but markets in Asia followed Wall Street. And so did ours. The All Ordinaries fell 1.6%, with resources stocks posting pretty big falls. The banks were down 1 to 1.5%, and manufacturers like BlueScope also fell sharply. The Australian dollar continues to move about a cent or more a day, but really it's just leaping up and down on the spot, waiting for a resolution to the Europe crisis. Here's a chart of the Australian dollar and the global share price index, and I'm calling them siblings in risk. That is, when investors are more risk averse, they sell shares and the Aussie. When they're feeling better about things, they buy both. Commodities are also risk assets, of course, and last night they had a rugged session in the United States. But there is a bit of good news about the Australian economy today. The Commonwealth Bank produces an index derived from all credit and debit card transactions, which is a kind of very broad retail sales figure. The latest one for September showed a rise of 0.2%, taking the index to its highest level for nearly 2 years and showing a recovery from the low of just 5 months ago that looks very much like a V. And that's finance.